Test. Hi all, and welcome to another edition of What's Moving the Markets by Phillip Konchar for FxPro. I'll just wait for a few more people to come in and join us properly before we start this broadcast and go into details. So let me just reduce my volume here. I have the squawk on as well. Okay. Now, hi all. Hopefully you can see the screen and you can see we have 10 seconds to the FOMC numbers. So not numbers, but like there is no rate decision. There's only a press conference. So really what I should do is I should put the markets on. Further rate increases possible. Inflation outlook concerns. Modest to strong economic outlook. Okay. So you're seeing immediate, this is S&P. Sorry, this is euro dollar. This is gold. Dollar yen. Dow Jones moving higher, breaking out higher. Dollar CAD lower. Cable is looking for a direction because of the Mark Carney. And let's see what's happening with the dollar index. And dollar index is pulling back a bit, which is bit strange considering that they might be looking to hike rates again. So let me just go back to the news feeds and find out. Hey, Progress. Hey, other guys. Thank you all very much for joining us. I think FxPro is just trying this new slot at 7 o'clock at night. And they are looking to see how this might work, but let's see. So let me just check. So I suppose you can see all the charts and you can see the FxPro logo and the slide. So what can you see? Can you just so you can see the camera. I assume you can see the camera, and I can assume you can see the FxPro, which is this screen here. I was hoping to actually have it on this side so I can talk to you and point to the screen, but unfortunately my screens are set up in a slightly different way. So this is my main screen, so I'll have to kind of look that way and talk to you. Unfortunately, but just checking. Can you just confirm what you see, please? Yeah, I think you can see this. Okay, cool. Look, guys, this is a very small group now. Very small group. Normally, we would have more people in. FxPro only trying this a slot now at 7 o'clock at night, and they've tried 12:30 in the afternoon, kind of lunchtime slots to see how many people log in and what the traction is there. and now they're trying the 7 o'clock. So let's see if this works out. Tonight we have FOMC minutes, which just came out, and I'll be covering that. And then I will also cover live markets. Dollar CAD is really selling off, guys. Dollar yen is pulling back. I think we're seeing a fairly strange reaction to the minutes. So there's no rate decision this time. And it's just the minutes. It's just the minutes this time around. Okay. So let me just reposition this, and then we can see all of that. So there is a chat, there is a camera, and the WebEx controller as well. Okay, now this is a very small group today, so guys, feel free, ask questions as we go along. If you need anything clarified, if you need anything covered in particular, I'll be more than happy to do so. So basically, all signs are pointing to, this is from CNBC breaking news now, all signs pointing to more rate hikes ahead. Federal Reserve officials see increased economic growth and an uptick in inflation as justification to continue to rise interest rates gradually, according to minutes from the central bank's last meeting. Now, what's interesting is this, guys. The fact is that wow, where is my it's there. Yeah, the fact is that we had these minutes which came out today, and they are basically telling us how the Fed members voted, before we had this recent market correction in US equity indices. So this was before the corrective pullback that we saw in equity indices, and obviously this is a last meeting that was chaired by Janet Yellen as well. So markets are really moving on now. And let me just, there's quite a bit of movement in euro dollar. So S&P is moving higher, Dow Jones is moving higher, DAX is moving higher, FTSE moving higher, gold moving higher. We have pressure in dollar yen, pressure in dollar CAD. We have euro dollar moving higher after reaching this very important 123, and then cable is attempting to go back above 140. Euro sterling at 88.23, Aussie dollar spot 78.70. Gold breaking through 1332, 1335. So fairly decent move now. There is no rate decision. This is all based on the minutes, Now, before I go and do anything else, I do want to talk about the calendar a little bit today. We can digest the news that we saw from the minutes, and then we will go into the markets and analyze some levels, but most of them have been challenged right now as we see. So the volatility trigger for today was actually this FOMC minutes, which came in at 7 o'clock UK time in the evening. Guys, you're all very, very quiet. So let me know if you need anything covered, if you want me to talk about anything in particular, and I'll be more than happy to do so. Now, before we go any further, I better go and do this. This is the disclaimer. If you've seen any of these webinars done by anybody else, you're pretty much familiar with the disclaimer. Basically, anything that we discuss here is available in a public domain and it should not be considered to be trading advice of any sort. It's basically just the information purposes and market analytical in its nature. From the regulation point of view, this is quite important. FxPro, your broker, and I don't know, some of you might be a prospective clients, you might not have the accounts with FxPro. should know that FxPro are execution-only brokers rather than advisory brokerage, and you should be aware of the leverage and anything that we discuss here should not take in consideration your personal circumstances and investment trading and investment and trading objectives. So if you don't understand what the leverage is, if you don't understand how the OTC markets work, please seek professional financial advice. So basically, our opinions and experiences, not advice. And we are not here to sell you anything. We are just providing you this market analysis in real time. We are covering fundamentals. We are covering the economic calendar, the data that might be coming out and triggering something. Oops, sorry. And rather than talking about anything specific. Now, basic golden rules for traders: never add to a losing trade. It's a good one. Never lose more than 1% of your trading capital in any one trade. So basically, manage your risk. Or Hugh O'Dally, thank you. Hugh saying, do you have any opinions on Bitcoin? No, I don't. I can pull the Bitcoin and we can talk about it, but I don't trade it. Hugh, I think I saw you in TraderCast yesterday or earlier on today, and I meant to say hi, but then you logged out. So it'll be good to kind of get you in, because there's quite a few people who are looking at crypto in there as well. Hi, Air. As a carrier. Trade in a direction. Don't never trade anything you don't understand 100%. Basically, be familiar with what the financial instrument is and how that might be impacted by the volatility that's scheduled, or you have to be aware of central bank speakers and how they impact what you trade. Only trade in the direction of the trend in your trading time frame. It's quite important. Make sure that you follow the trend. Trend has a greater probability of continuing rather than reversing. Only look for low risk, high reward trades or high probability setups. When you don't have signals, don't trade. Trade your plan, your system, your signals, the chart and price action, and not your opinions, bias or predictions. That's the good one. Find a trading methodology that fits your personality. Don't trade before you have a complete trading plan, including rules on entries, exits, and risk management. The size of your winning and losing trades determine your trading success, and your risk management rules will determine the success of your technical trading system. If you need to contact your account manager in FxPro, these would be the best way to do it. So these are their telephone numbers for the UK London office and also for the Cypriot office as well. Okay, so now let me get out of this for now and I'll go into the actual live chart. So now, apologies, guys, again. I thought that I would be able to have the charts on this screen and basically look at a camera while I'm talking to you and talking to the charts, but unfortunately I have to look away from here and then talk to you. So I'll just need to adjust the camera next time, either put it on the other side or maybe flip the screens, make this my main screen, and so on and so on. Here we go. So we have Hugh question on Bitcoin. I found your previous webinar very effective and also liked your presentation at Trader Conference, but today we are having sound problem. Test. Just checking. Can somebody confirm? Yeah. Okay. So check your. Check your speakers and volume. Okay, brilliant, 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 brilliant. Thank you so much. Now, so let's cover something. Let's cover something that's of interest. I think the main event happened. The main event already happened, but let's see how this works. Apologies for joining late. Just have issues with first time on Mac. Sounds perfect. Sounds perfect. Fala says I'm new. Well, make sure you educate yourself properly. Find reputable educator or speak to your account manager and at your brokerage. And I can assume that you're here because you are either a client or a potential client of FxPro. Make sure you speak to them and they'll point you to a good educator who can possibly help you out. Don't rush into trading a real account and real money until you understand leverage and understand all the other risks that you're exposing yourselves to. And make sure you put enough practice and learn as much as you can before you engage with the markets. Excellent, excellent. Okay, fine. Now, so let's do this. So some of you have seen me during this London Traders Conference. Some of you have seen these webinars before. Some of you are already using TraderCast on your trial period. So feel free. Ask as many questions as you can, and then we can cover them as much as we can as well. Now, a couple of things actually happened today from the economic calendar point of view, and I'll just go back and explain why we're seeing all this movement. So this morning we received some PMI data for services and manufacturing for various European countries and also for the Eurozone itself. And then we received employment data in UK and average earnings and jobless claims in UK. So the jobless claims forecast was that we will see 2.3 thousand people, but it was actually a drawdown, a minus figure of 7.2 thousand. Average earnings came in 2.5 in line with expectations, and then employment forecast was 4.3, but the actual published value was 4.4. So the unemployment rate is a little bit higher than initially anticipated. And then we had a Bank of England at 2 o'clock inflation report and the statement when Mark Carney and loads of other people were actually talking. They were actually talking and explaining their views on. Let me just see, where is my thingy? Okay, so I'll dip into the TraderCast. So here we go. This bit here is actually quite important. This note, this post that we were looking at cable, but basically a Bank of England inflation report, key quotes are moving sterling. Bank of England Mark Carney said that further stimulus withdrawal needs in coming years. The case for withdrawal or stimulus will be there if GDP exceeds 1.5%. Interest rates will not return to long-run average of 5%. Monetary policy is nimble and will react to changing economic expectations linked to Brexit. The need for a direct pre-commitment to raise interest rates has gone away. Last time when he spoke, he said, guys, don't be surprised, interest rates might be going higher much sooner than anybody else thinks and faster than anybody else. Now this is almost contradicting it and so on. And then we had kind of a pullback in cable. And then we had reasons for more hawkish view is now stronger world economy and someone in UK too, and that kind of stuff as well. So these were the kind of key quotes. And sorry, what you're seeing here, this is TraderCast community, and I just posted this report in there already. So I just wanted to kind of read it for you. And that was all happening at 2:30, and that impacted sterling straight away. That impacted sterling straight away, and sterling was a little bit softer. And we during that time we had actually a nice rally higher in the US dollar. So now we're seeing dollar weakness. Now, the other thing that actually happened today is from the US, we got manufacturing and services PMI as well, existing home sales in US, and now the biggest event for today was basically this FOMC minutes, and this is the first minutes which are basically covering the thought process for the FOMC and their opinions towards potential future rate hikes. And that voting was happening before we saw this big sell-off in equity indices recently. And you saw the actual reaction straight away. So there was no change in rates. There was no rate policy decision today, but it was only minutes, only what happened last month and what was their thought process, how they voted, and what they thought as well. Going forward very, very quickly for tomorrow and Friday, there's a few important numbers which are coming up from the economic calendar, which could impact financial markets, and then we'll go into the actual specific financial instruments and look at those. Any chance euro sterling dipping below 88 in the near future? Well, I hope it does. We are sitting very close to that level. So there is that 88 level that we are all looking at, and it's been tested, rejected, tested, rejected. 1, 2, 3, 4, 5, 6 4-hourly candles, almost a day and a half worth of trading, and then there is another one here, 2 days, 2.5 days worth of trading, testing that level, and it's holding. So this is my amber warning. And I'll talk about that, the importance of that level a little bit later. Nick is probably mentioning it because we talked about it in TraderCast, and we also talked about it during the Traders Conference as well, that 88 level. It's not broken yet. It's not broken on the upside above 89, but it's not breaking below 88 to open up the way for the retest of 87.40, 87, 86.50 to the downside. But a good question as well. So from the economic calendar, going back to economic calendar before we go into any further financial markets and instruments, is here. So tomorrow we are receiving IFO business climate from Germany at 9 o'clock in the morning. That will quite likely move DAX, i.e. a German 30 equity index, but also euro currency crosses. We are getting GDP for UK, and the expectations are that gross domestic product for UK will show 1.5% year on year. Previous value was 1.7. Any discrepancy or a difference in the actual value published to the one forecasted will significantly impact cable volatility. So sterling dollar, sterling euro, euro sterling, sterling Japanese yen, sterling crosses in particular as well. So that's coming up at 9:30 in the morning tomorrow. Keep an eye on that. And then in the afternoon, we are getting weekly jobless claims at 1:30. Weekly jobless claims is the report that tells us how many people claimed US unemployment insurance over the past 7 days, and the forecasted number is that that number will show 230,000 people claiming unemployment benefit or insurance in US. And if we get a smaller number than that, that will probably be seen as quite bullish for US equity indices. If we see much larger number of claimants, then that will be seen as negative for the equity indices in particular. So volatility can increase, and that's at 1:30 in the afternoon. Retail sales for Canada coming up, and then normally crude oil inventories are published on Wednesdays at 3:30 UK time. And because US markets were closed on Monday for President's Day, there was no trading. That data release is actually scheduled for Thursday now, and it's coming up tomorrow at 4 o'clock in the afternoon UK time. So if you're trading energy, if you're looking at crude oil, Brent, anything like that, that data will likely increase volatility for WTI, Brent futures, and energy commodities in particular, but also for some commodity currencies like Canadian dollar as well. And the estimates are that that kind of reading could possibly show 1.6 million barrels drawdown for the past 7 days. So any difference than that would be a significant trigger for the volatility in crude oil in particular. Overnight, 11:30, 12 o'clock UK time, we are getting consumer price reading from Japan. So Bank of Japan, 11:30. And finally, on Friday, we're getting GDP reading in Germany, and we're getting consumer price index for Canada at 1:30 in the afternoon, and oil rig count at 6 o'clock in the evening. And that's it for another trading week. So that's all we can talk about from the fundamentals and economic calendar point of view. But these are the key numbers and key data that will impact a potentially increased volatility in this particular financial instruments. So let me just see FOMC minutes, the key quotes. Recent strengthening of US economy increases likelihood of further gradual rate hikes. And you would think that that's probably a bullish for the US dollar. And what we are seeing here, we are seeing a bearish reaction for the US dollar. We are seeing a bearish reaction for the US dollar. This is dollar index, the one that I was talking about during the traders conference when it was down here at around 88.50. We came close to that magical 90 level, 200 period moving average, and we started selling off. We are seeing that trend line as well. That's respected as well. So another key point that we should take a look are, so just bear with me a second here. Most voters said a recent data supported view that inflation will rise in 2018 and stabilize around target in the medium term. They saw some voters saw an appreciable risk that inflation will lag the projected target. A couple were concerned about the inflation outlook. Most say recent data suggested modestly stronger economic outlook than was expected in December. Voters generally judged risk as roughly balanced. Several saw increased upside risk to near-term economic outlook, and recent strong data and inflation suggesting tax overhaul might have longer impact than originally thought. This is all coming up from newswires, and I'm just reading these key quotes regarding the FOMC. Now, so let's go and take a look at a few levels, and then we can try and work it out. Okay, so apologies, I need to look at this screen rather than the camera, but that's where we are. So here we go. This is the dollar index that we were talking about. Clearly defined downtrend, some selling pressure in dollar index, but major support down here around 88.45, 88 levels. These levels are so significant to hold support. Confirmed loss of these levels would be seen as a fairly bearish development for the dollar index. So if we see any oversold bounce backs, the first bounce backs could be capped by this falling resistance trend line and also the cluster of these previous lows at around 90 area, which is what happened. That was a daily, so this is the 4-hourly chart. That's why we had this amber line here. So basically what bears are looking, they're looking for a rally and then a sell-off further to retest this current lows around 88.85, 88.45, and then 88. If these levels hold and we see a sustained pullback and then this looks like a breakout of this falling resistance trend line and then a rally higher, this 90 level would come in play again. So then we can take the fib from here to here, and that gives us 61.8. And if we do fib from here to here, that gives us 61.8. If you do fib, sorry, let me just do this very quickly. If we project the Fibonacci, and if you don't know what I'm doing, find out a little bit more about fibs. They are useful analytical tool to have. This is a 50% fib retracement. This is a 61.8, and these levels would also be referenced as a previous highs and lows, i.e. horizontals. So if we see a pullback, breakout, pullback and rally from here, so therefore dollar strength, US dollar strength, then that 90 area would come in play again. Breakouts above 90 would open up the way for the retest of something higher towards 90.40, 90.66, and even 91. And this area at 91 for the dollar index would be really significant resistance, because that 90 area would be that end of day falling resistance trend line, and we are here very close to a 50 period moving average, 50 period moving average as well. So very important levels to watch from the upside. So intraday bearish below 90, breakout above 90 would potentially target further upsides towards 90.40, 90.66, 91. Alternatively, a confirmed loss of this area here back below this falling resistance trend line. Bears are still in control, and then we could see a pullback to test these lows, 88.85, 88.45, 88. Now, why is this important? Well, it's hugely important because this particular financial instrument, which is called dollar index, is inversely correlated to euro dollar, to sterling dollar, but it's correlated with dollar yen, and it's correlated with dollar CAD, and it's also impacting gold. So if gold is traded in dollars, so if we see dollar weakness, gold goes up. If we see dollar weakness, normally crude oil goes up. If we see dollar weakness, then that means euro dollar goes up, and so on and so on. So it's an instant correlation to all of this frequently traded and very liquid financial instruments that people are keeping an eye on and watching as well. Now, so let's talk about euro dollar first, and then we can go into dollar yen, sterling dollar, and we can talk euro sterling, talk about gold, and then we can talk about equity indices. We can talk about crude oil as well. I don't know if we have a Bitcoin here as well on this particular account. What is the ticker for a Bitcoin? Would this be the Bitcoin? Bitcoin in dollars. Yes, that's the Bitcoin. So here we go. This is the Bitcoin. So let me just apply the template and make this visible for you. Actually, I can apply different template with some stochastics as well. Okay, very, very simple here, very, very simple. Let's see where this takes us and if we can talk about it. So I don't necessarily trade Bitcoin in any shape or form. I'm keeping an eye on it because it's quite topical. Loads of people are kind of looking at it. But from the technical analysis point of view, and yet again, it's very difficult to trade something that you don't understand. And I don't understand what actually moves volatility, what increases the volatility in Bitcoin. It's moving on something that's been said or hinted about by central banks. Like today, Mark Carney was saying when he was speaking that cryptocurrencies failed to almost legitimize themselves and embed themselves in the kind of mainstream, and that caused Bitcoin to reverse a bit as well. But let me just see if there is anything that could potentially in the news. Nothing that I can see here. Yeah, nothing that I can see here that references cryptocurrencies. There's nothing breaking at the moment. But from a technical point of view, so let me just see who actually asked this. Richard Baker is talking about euro dollar. Yeah, we'll talk about euro dollar. So okay, Hugh. Yeah, Hugh. So really, this is the daily time frame for Bitcoin. We are seeing the sequence of lower highs. This appears to be a very corrective move. It's a little bit difficult to figure out where this might go. You have this rising support trend line here, which is a longer term trend line, but then you have this rising support trend line here, which kind of almost failed. So we really need to go into a much shorter term time frame to figure out some levels. And let me see if I can do that. So if I go down to a 4-hourly time frame, I would be keeping an eye on this. So this here would be a first important level to watch. If we see a loss of that level and then loss of this level here, that would potentially indicate that we could see more downside, because then this trend line is lost and potentially we could see a deeper retracement. Those retracements can be initially supported by these lows here. So 9,722. So something potentially something like that. Something like this can happen. And then we could see maybe a deeper retracement. And I'm only guessing here because I'm trying to do a technical analysis on something that I don't really understand. So we are applying the fibs below this 9,700. We have 9,000, which is the 50% fib retracement, which is this area here. And then below that level, we have 61.8 and a cluster of these previous lows at 8,382. So a huge, absolutely huge, massive move. And if that is to happen, then that would mean a deeper corrective move lower. And this is Bitcoin in 4-hourly. Now, the other opposite move is if we see a swift return above here and something like this. So breakout above this rising trend line, and then this becomes only a fake out, so the false breakout. So we see something like that. Then bulls are still in control, and then potentially we could see a spike higher. And then that spike higher is initially capped by these highs here at 11,600. Above 11,600, we have these highs here, 11,844. And yet again, a big caveat, guys, is I don't really understand this product from the fundamental point of view. This is purely a technical analysis of something that's quite volatile. And then a breakout above there could potentially target additional upsides or resistances up here, 12,683. Because you have these previous lows, then there is an empty space here. There is nothing. There is a vacuum before you start hitting these kind of previous lows here. 12,683, 13,000 area on the upside. But it's at an interesting level. Let's put it that way. It's at an interesting level, and let's call it a point of control. So basically, it's in no man's land. It's in no man's land at the moment, with this area here needing to confirm. So bearish below, a bullish above, with the levels. Okay, so was that okay, Hugh? Do you need shorter time frame? Okay. I hope it helped. I hope it helped. But today it moved when Mark Carney spoke, and that was the one. That was the one that kind of triggered it. I'm scanning the news here, just to see if there is anything. Yeah, there is really nothing. There's okay. I came across something here. It says that South Korea will support crypto trading, according to this news feed. South Korean authorities confirmed the country's government will support cryptocurrency trading, according to this report. Bank of England Carney argues Bitcoin has failed so far as a legitimate currency. Bitcoin is losing some ground today. It could be just a buying opportunity given that current technical view. However, before we move to the most important revelations regarding virtual currencies, let's take a look at the charts below. So I'm just reading from this report. South Korea government plans to support digital currency trading. It's going to be a turning point. Is this going to be a turning point for Bitcoin? According to the head of South Korea Financial Regulatory, the country's government will support cryptocurrency trading and will encourage banks to facilitate transactions with exchanges. It looks like the ultimate end of the long prolonged period of elevated fears with regard to a potential ban of virtual currencies. South Korea develops the blockchain technology. It could be an important change for the whole cryptocurrency industry, as the country accounts for a crucial part of it. Bank of England Chairman Mark Carney said Bitcoin has failed as a currency thus far, and then explanations why, and so on. Okay, so I won't be boring you with that kind of stuff. So let's go and talk about euro dollar or something else. Okay, so we talked a little bit about sterling. We talked a little bit about dollar index, but let's talk about euro dollar, guys. So this euro dollar appears from the daily point of view to be potentially forming a double top. The only way for us to know that it's a double top is if the price closes down here. I think somebody, Richard Baker, was saying euro dollar, there is potential double top in his opinion. I would agree with that, but the only way for us to call it double top if it goes here and then loses that. So I was looking at this daily candle during the London Traders Conference, and we were talking about a possibility of a deeper corrective move towards this rising support trend line. And the levels that we were keeping an eye on from the support point of view were at 123, and the reason why that 123 will come in play is because it's this previous low here, and it's also 200 period moving average in 4 hourly, and it also happens to be the S1 I support one in daily pivots at 122.93, so very close to 123. So 3 significant reasons why this is important level. And also you can draw a fib from here to here, and we are capped by this 61.8, and we are just below it. So there is a cluster of things pointing to that level. So this is a 4 hourly price action coming lower and testing that initial support. A confirmed loss of this 123 would open up the way for the retest of further downside support. So basically maybe a deeper corrective move towards either S2, S3, or this other rising trend line down here. So we have S2 at basically support 2 in pivots, 122.63. Then below that we have 122.28. Then below that we have 122, nice and round number, and then 111.85. So that will be kind of the bearish outcome and the bearish scenario. What bulls are waiting for, because don't forget, this is a long-term bullish trend here. It really is. Bulls are looking to defend this 123 level and look to challenge this area here. I'll make this larger for you so that you can see it. And apologies, guys, I'm looking away from the camera for those of you who are joining us late. My main screen is on this side rather than this side, so I'll try and look in your direction as much as I can. But bulls are looking to defend this 123 area, cause the breakout. You have a number of moving averages here, you have a pivot here, and then if that holds, we could see a spike higher and continuation of that uptrend. So the levels to watch on the upside are initially capped by 123.35, 123.40, 123.55, 123.70, and then above that we have this area here, 124. 124, and that would be the bullish outcome. At the moment, we had a big, massive spike higher, and now we are reversing lower. So a selling pressure here from the intraday point of view. The price action could not be sustained above this pivot. Currently above this pivot currently, and from the intraday point of view, 15-minute, this is very, very noisy. It's going sideways. It's not giving us any direction. So that's the spike on the FOMC and then a retracement. So now let me just show you how that correlates to euro sterling and maybe something else. Oh, by the way, that was also posted here. So what you're seeing here, I don't know how many of you are actually, you're more than welcome. I don't know how many of you are actually using TraderCast, and this is the community segment in the TraderCast. So I've posted that Euro chart this morning. Here we go. It's this one here. And it's looking at that 123, basically saying in 4-hourly chart, euro dollar is testing rising support resistance at 123, and support levels are 123, 122.63, 122.30, and 121.85. Upside is initially capped by 123.35, 123.43. Confirmed breakout higher could target upside. So exactly what we were talking about right now, and this was posted at 9 o'clock this morning while we had a morning broadcast, and the members who are using TraderCast can click on this, and basically they can see all of these posts, all of these analysis, and they can also click in here and watch the broadcast as well at 9:30 until 11 and 1:30 until 3:30. And if you have a live trading account with FxPro, they are sponsoring your trial for 30 days. You're more than welcome to come and use it. All you have to do is just register. Just register on TraderCast and put FxPro in the introducer field, and then I will contact them and ask them if you qualify. If you qualify, then I'll send you an email to activate your account. Don't proceed to the payment. When you come to the payment, just log out. Please log out. Do not pay. And then we can take it as from there. And we would love to welcome you in the TraderCast community. As I said, this is in, kind of a little gift to you by FxPro. Okay, now, so that's euro dollar. Do you want to see anything else? We talked about cable very quickly as well. The cable appears to be moving higher, but then we have this corrective pullback now. So from the daily point of view, cable is looking for a direction here. We know that the sterling dollar is nicely uptrending in 4-hourly time frame. These are the key levels for the sterling. So the initial upside is capped by 140, one spot 40, one spot 40, 19, i.e. 1920. 140.50. Only a confirmed breakout above that level, and that would basically trigger something like this. So this would look like a falling wedge in overall prevailing uptrend, and then that would cause a nice breakout high. So if something like this happens, a nice green candle is formed above that level, then what bullish traders would be looking to do is they would take this many points from the previous consolidation, and then they would add it up, and that would bring them to up here somewhere. And that level is very similar to what we are getting here, this falling resistance trend line, and it's also very close to this previous high as well of 141.36, 141.50, 141.70, kind of thereabout. So that'll be a bullish breakout, but we need to see a green candle here, really closing end of day 4-hourly, something like that, and then a nice bullish sentiment. Either by something that Bank of England did or said, and today was their chance with the inflation report and Bank of England MPC members speaking, or the dollar weakness, and that would cause sterling to rally higher. If we see this dollar strength, then basically what could happen is something like this. We could see a loss of this current support. It would negate the existence of this falling wedge. We could see a retest from underneath to something like this, and then a very swift move lower to test this support zone here, which is the one that's quite important in 4-hourly and daily, 138.55, 138.13. Below that we have 137.60. Below 138.60, that would open up potentially for the retest of 136.60, 136 even, 136 even, all the way down here as well. So that would be kind of a bearish scenario for sterling dollar. And obviously we should keep an eye on sterling dollar and sorry, apologies, I'm trying to delete this, sterling dollar and euro dollar, and that would indicate to us what might potentially happen. Look, dollar index is firming up here. I think we might have another go to this 90 area. That will tell us what might happen in euro sterling. So now going to euro, guys, do you need to see anything? Hi Thomas, hi Pip, Nick, Mauricio, Hugh, Hugo, Graham, Francis, Fala, Zakaria, David, Eta, Anthony, anybody. This is euro sterling, guys, and euro sterling is really going sideways. It's not trending at the moment. It's range bound, and there is this fairly decent trading range of approximately 200 points. So the price is ranging from roughly 87 to 89, and then down here from 89 to 87, then again 87 to 89, and then down to 87, up to 80, 89, down to 87, and so on. So it keeps doing that. It keeps doing that. So here we go. One up, one down, one up, one down. Now, this needs to break at some point. So if we see a confirmed loss of this area here, which is the 88 zone, and that's kind of a no man's land. That's the area that everybody's watching. Absolutely everybody's watching. If that happens and we see a significant confirmation in your time frame for a euro sterling and a dip lower and a dip lower, close lower, and so on, that could quite likely trigger some bearishness from the sentiment point of view, and a dip into this zone here towards 87, 40, 87 to test that longer term support area that was tested here and here and here over and over and over again. There is no certainty, but that's what it looks like. The price is ranging. Okay, the price is ranging. Only a confirmed loss of that area and a dip below would open up the way for the retest of 86.50 to the downside. Now, the upside is also the possible scenario, and that means if this 88 level holds, and then we see a rally into this zone up here, then bulls are waiting for a confirmed breakout above that 89 zone, and the end of day candle closing, not the wick, not the wick like here, the actual green candle firming up and closing here in end of the day, then that would potentially mean that this sideways consolidation, a longer term sideways consolidation, is breaking out to the upside. That means sterling weakness and euro strength, and then we could possibly see a spike towards 89.60, even higher towards 90.40, 90, let me see, 90.30, 90.40 area on the upside. So 90.30, 90.40, 90.45 area, which is up here, then that will be a really bullish reaction, and it'll be punishing. It would be really punishing for sterling, for GBP against the euro. Breaking news on WTI, FOMC minutes, Brent settle 17 cents higher, 65.42. Secretary and Treasury. Houston pilots have, there's something with Houston with flights. Okay, that's it. Now, so let me see. Nick is saying this is the one that breaks 90 on the dollar index. So let's hope. It will be good to see some dollar strength for change. But Nick, lovely to see you back in, and thank you for asking. Thank you for asking. Guys, the rest of you are very, very quiet, so feel free, ask some questions. We really have a few more minutes left, so do you want me to cover anything before I go? Do you want me to cover anything? We've covered quite a lot, actually, but do you want me to cover anything in particular? This is gold. Gold in daily, we are seeing this massive selling pressure in gold. This is relating to a dollar strength, so dollar higher, gold lower. That's how it works. We also have equity indices higher, gold lower. So what we are seeing here is we are seeing that gold is ranging. We had initial spike higher on the FOMC, but then we are now in this sweet spot. This shaded area for me is like it's a sweet spot. It's a no man's land. It needs to dip lower for some aggressive selling to occur. And if that is the case, then we could potentially see a very, very quick a very, very quick retest of lower levels towards these previous lows. So anywhere firstly around here at 1324, followed by 1320. Loss of 1320 would open up the way for this zone down here at 1312, 1310. So down here. So that'll be the bearish scenario for gold, shoulder, head and shoulder, which is then negated by these breakouts above the neckline. So all of this becomes one top, this becomes the second top in development, and so on. So that'll be the bearish scenario. Bullish scenario would look like something like this: a spike above this initial resistance at 1332, a breakout above that level, a daily close above, retest from above to test it as a newly found support, and then a spike higher towards 1336, 1340, followed by 1346 to the upside. So just to show you how that kind of looked in here, we had a post for gold in the community in TraderCast as well. So gold capped by 1337, supported by 1324. FOMC minutes could increase volatility in precious metals, and these are the levels. So you could click on this and see the chart, which was posted, and this was posted at probably about 3 o'clock today during the broadcast. So you might, if you're looking for the levels like this and you're finding what I'm talking about here useful and actionable in some way, you're more than welcome to come and benefit from that, the kind of daily analysis as well that we do. And also what's important is, guys, keep an eye on FxPro blog. And there's plenty of things posted on FxPro blog. So let me just see if I can. Here we go. So this website here, and I was talking about it. Here we go. Gold is actually selling off a bit. This FxPro blog here, I watch it quite a lot actually, but you have plenty of things posted here from the macro point of view. From this type of report will set you up in the morning. It tells you from the economic data what's coming up, the macro story, how the market's opened, and what's coming up from the economic data for the rest of the day. And then quite often you see a number of reports. So there is also Aussie dollar and Euro sterling posted in here with the levels. And then a little bit later, there was something on Brent and dollar CAD as well. Brent and dollar CAD with charts and levels. So it's a really useful. And then Alex was talking about US Treasuries and how that might temporarily support the dollar as well. So this is exactly what we were talking about, and the dollar index. But it's blog.fxpro.co.uk, and it's free to access. You don't have to register. It's actually a very good site as well. You're more than welcome to use it. It's the FxPro one as well. So gold is pulling back. So let me just see. David Norris is saying, what is your view on 7-year pattern of stock market collapse that happened previously time after time? Well, market's correct, and I was fortunate enough to trade 3 of them, and when the next one comes, I'll be ready for that one as well. But it's difficult to predict it. Anybody who was trying to predict it was wrong so far. Something usually stupid or unplanned or something unknown triggers it. Sorry, it's probably loud, but a very good question, David. But you had a dot-com bubble and correction in 2000. Before that, you had 1987 crash in UK, which triggered global markets. After that, you had 2000.com. After that, you had a credit bubble with Lehman Brothers in 2008, 2009. Before Lehman Brothers, they were like the different warning signs with the State Street and Bear Stearns and all sorts of other small little banks, alerting us to something. But market kept on going higher. So if you're talking about the exact 7-year cycle, it's not really exactly 7 years because that varies. So I know loads of market economists and talking heads do want to publish reports because that incentivize people to click and read that report, and it sounds very good when they do eventually predict something, but they could be wrong over and over again, especially people who are following Elliott wave or saying, I know exactly what's going to happen at whatever time in or a point in the future. Markets do move in cycles. That's true. They move in stages, but they need to come to that kind of trend reversal point at their own pace, and they can stay irrational for so much longer than anybody can stay solvent. So if we are going with this exact 7-year cycle, then from 2008, 2009, we should have already had a correction, but we didn't. And we are in 2018 now, and we're still going strong. There is a small corrective move after a substantial amount of positivity in the market. So the trend is still up, and until that trend changes and creates a lower high, we don't know that the actual the trend reversed and the correction started. So a very good question anyway, very, very good question. But I'm keeping an eye on dollar. That'll be quite telling. Here we go, baby. It's going to 90. Dollar index is going to 90. This is gold going lower, 1324, 1320. We have euro dollar pushing through that 123. Keep an eye on that level, really, really important level, 123 on euro dollar. We have cable still being pushed lower. Dollar yen is moving higher. Dollar yen is moving higher. The levels to watch from the yen point of view, upside is now initially capped by 108, 26, 108, 45, 108, 67. Downside is initially supported by 107. 30, 106.70, and then these lows down here, 105.80. But this looks quite nicely and corrective. So basically a rally in overall a downtrend. So this downtrend is yen strength. So when we had the volatility kick in and equity markets were selling off, majority of the fund managers and investors started liquidating their equity holdings and piling money into safety, and Japanese yen is one of them. So that's why we're seeing this as a yen strength, i.e. dollar weakness, and a safety play. Okay, so David, don't take my my answer as the definite answer. That's only, as I said, opinion. I would like to see a volatility increase, because when volatility is increasing in the markets, then markets are tradable. You know, that's actually good. But this is what I was referring to. So this is S&P, guys. We are overrunning this, but S&P. This would be a telling. I don't know if you watched. Did you see that presentation either online or I don't know if you were in auditorium or not, but it was actually sponsored by FxPro in Mayfair. It was a very, very good event. So basically, what Fala Said said, yes. Okay, so we were talking about a DAO, because there was a question from the audience. And I think you can see it on YouTube as well. It's the second day of London Traders Conference. And I was going on for a couple of hours probably, but we were talking about this area there developing a doji. So this is S&P rather than Dow Jones, but they both look the same. They both look the same, and this is the daily time frame chart that we were referring to. So we had an initial sell-off. Overall, this was a nicely bullish. This is going higher, going higher, going higher. Fine, perfectly fine. Higher highs, higher lows, uptrending. You cannot dispute it. Then what happens is this volatility kicks in, and we see this nice corrective move. Now it was still controlled. There was no panic. Okay, it dropped 1,000 points, but that's okay. It was only a 10% correction. Now, so when you go and open this up in a different time frame, now we have the sequence of a lower high. So there was a doji pattern here. I'm trying to make this larger. So this candle here closed on Friday, and that was a doji pattern. And doji pattern usually indicates indecision. So, and that's also that was also a significant fib retracement of 61.8 as well. And it's also close to the gap. So I'm making this higher so you can see. So the fact that we actually had that indecision candle, and the following day was actually a closed day of trading. So US was not open for trading on Monday. And then I was saying, be careful if you are looking to trade. We could see a random outcome because the US markets are closed and so on. So the fact that this is actually pulling back, keep an eye on this falling resistance trend line. So this area here, which is shaded area, and it's coming to this 24,880. I'll give you the exact number: 24,840. 24,700 is a hugely important. So just listening to the news at the moment. Treasury is falling, equity is falling, dollar is rallying. Meaningful reaction to the FOMC minutes with some delay, according to the Squawk and the news feeds. We have Europe pulling back, cable pulling back, dollar yen rallying higher. We have gold under pressure. We have equity indices under pressure, and dollar index, DADI dollar, is breaking out through this 90 area. You beauty. Now we have, so if this here happens to be a significant lower high, David, then this would be a significant piece of information for us, and then we would say that the price is heading lower, and it's potentially going to retest deeper retracements, maybe even these lows. But as long as it stays below here, that's the key level for us now. So the key level from the longer term resistance is at 25,200, 25,335. Now, guys, we overrun by I started earlier and we overrun. So I would love to carry on talking to you. I really do. Now, can you do me a favor, please? I really need your help with a few things. It's only a small group today. Can you please call FxPro and give them your feedback? If you have the accounts with FxPro and if you like what you're seeing, give them your feedback and tell them if you prefer this 7 o'clock in the evening slot, or do you prefer maybe midday, 12:30, what we were doing up until last Wednesday. And we're just trying different slots to see what works. I'll be doing the non-farm payroll on 9th of March, and that'll be from 12 o'clock midday as well. So if you like what you see and you're finding this information useful, or you wish to come and join us in TraderCast, can you please give them a call and give them your feedback, because it would help me a lot. I would understand what works for you, and then I'll try and make it better for you. And thank you for your engagement. Thank you for your questions and your comments as well. So that's really good. Yeah, Zakaria. Yeah, if you can just give them your feedback and please tell them what works for you, and if you found this useful, it will be good. It will be really good. Richard is saying it was good. It was useful. David Norris. David, I don't know if you're using TraderCast or not, but you're more than welcome to come and join us as well if you have FxPro account. Nick as well. Thank you guys so much for watching and listening. Stay safe and happy trading, and I'll speak to you all next week. 28th of February, I believe, is the next scheduled webinar that we have in the evening. It's 28, and then I think you'll have another guest on the 7th, and then I'll do non-farm payroll on the 9th of March as well, and that'll be midday. So thank you guys. Talk to you soon. Stay safe and happy trading. Bye for now. And I'll go back to this disclaimer, and also to the contact page if you need it for your account managers. It'll be really good. Thank you for watching. Thanks for listening. Stay safe. Bye for now.